fear in trading is driven by uncertainty. It's driven by feeling like we might lose more than we're comfortable with. And there's two things that you've got to do. The first thing you've got to do is understand your personal objectives, particularly around drawdown. How much drawdown in your account, how much of a dip in your account can you stomach and still sleep at night? Still do what you need, still do what needs to be done. Some people are comfortable with an account that fluctuates wildly, people who are young, earn a lot of money, have a long kind of career ahead of them, might be happy with a 30, 40, 50% drawdown in their account. Someone who's in retirement and wants to protect and maybe grow a bit of what they've got might be only comfortable with a 15% drawdown. Your numbers are your numbers. So first thing, understand your objectives. Next thing is design your systems, your risk management, your position sizing, your leverage to fit within those objectives. So if you know that your maximum historical drawdown, trading your system the way you're trading it now, is well within your bounds of comfort, then you can sleep well at night, you can wake up in the morning, you can pull the trigger. But if you know that trading the way you're trading now, the drawdown could be bigger than what you're comfortable with, you're going to be nervous every time you pull the trigger. So you've got to understand your objectives and fine-tune your system, your approach, your risk management to fit them. That's the key.